Hello, welcome to the Oxen Group Nightly. My name is David Ristow. I'm the CEO, President, and Founder of the Oxen Group. We are a equity analytical research firm that gives out investment ideas and equity analysis reports. Check us out at www.theoxengroup.com for more information. Tonight on the Oxen Group Nightly, we will be talking about Tuesday markets wrap up. We'll be looking at a couple of new positions that we picked up today, as well as some of our other current positions and exits we had today. We'll also be looking at a new portfolio that we're just starting. It's called our Extended Value Portfolio, and we'll talk more about what that is later in the nightly. And we'll also be looking at our forecast for tomorrow, as well as always check out our disclaimer at the Well, it was not a very good day in the market today. The market fell its farthest since Japanese crisis began with the beginning of the nuclear sort of disaster. But today, or actually yesterday, the country announced that they were raising the level of the crisis to the same level as the Chernobyl disaster. Now, that raise was a little bit. It wasn't at the same level as Chernobyl. The disaster in Japan is not at the same level as Chernobyl. I read a report that there's only about 10% of emitted radiation as compared to what happened in Chernobyl. But the Chernobyl disaster was so bad that it just was so far off the scale that the scale basically does not did not account for the Chernobyl disaster. So. That spooked investors. That coupled with some weak earnings that we got out of Alcoa, at least the market viewed them as pretty weak. And I think generally the market was pretty overvalued and looked positioned for a little bit of a pullback. And we also got some weak news on trade balance. Exports fell 1.4% in February, which missed estimates. So you really didn't get anything good overall. Oil prices continue to drop pretty significantly. And Goldman Sachs came out with a report further today that they expect oil prices to continue to drop from these levels. And those all kind of coupled together. You got the energy sector was hurt by sort of the oil price news. Exports falling sort of hurt some of your multinationals. The Alcoa earnings hurt some of the materials and the industrials, and then the overall market got spooked on Japan. So you got just a broad-based sell-off today. I think it was just a lot of people taking some profits off the table, and things getting a little bit weakening on varying news, and a lot of people selling off today. So. One of the concerning things that we saw today was there was more sign of inflation's appeared on the core export and import prices year over year. And you see here 8%, we're nearing an 8% year over year increase on export prices, showing, and we had a weakening dollar that was supposed to be strengthening that. But this is an interesting inflationary risk as export prices continue to increase. That's going to decrease the amount of exports we have. But import prices are also increasing, and you see it's pretty much tick for tick with the export prices. So I think that is good to see, but at the same time, it's not good to see how much they're rising. So here's a chart of what happened today on the Dow. Nothing good there, really, to say. The market dropped out of the gate, got a little bit back, gained at the most about 60 points from the low, but we dropped off that and ended up just slightly off the lows, not as high as the beginning of the day. And overall, it just was not a good day. It was just a broad-based sell-off. I do think there was definitely some positioning into some stocks that are coming up, and some stocks showed some strength. And those stocks, I think, that showed strength and showed resiliency today, definitely are ones that you got to consider as some possibilities to continue. And one of those stocks that we picked up that was showing strength was Apple. We entered the stock at 331.80, finished up in the mid 332s. And after hours went up to the mid 333s, and this is a stock that's definitely I think is about to get that nice support moving into earnings. We like this stock for about a weekly play here. Moving into earnings, they have earnings report next Wednesday, and we had a great support line that the stock hit today. It bounced right off that support line, showed great strength off that, and continually, you continue to get pretty solid reports across the board for Apple. Everything from analysts continuing to upgrade and raise price targets. and they continue to show strength. And I think some of the weaknesses that had been on the table for Apple, including their material costs maybe rising, some concerns about maybe an iPhone delay, as well as the Nasdaq repositioning, have been priced in at this level. As you look at the stock, it's dropped pretty significantly from right below 360 here. Broke about over 355 and dropped as it hit this resistance line on the price channel, and drop down here. And the stock has shown really great strength at 330. It's been a great strength point since for the entire year. And we expect the stock, the stock's already rallied up to about here off this price point, and we expect that rally to continue. As you see, the last times it's hit that, it's gotten strength and moved up every time it's moved on this support line. So we expect, with earnings coming up, you're getting a nice catalyst for the stock. A lot of people are pretty bullish about their earnings. A lot of companies are. A lot of institutions are behind this stock, and we think that that this is a great time to pick up this stock as we move into earnings. You got the technicals working and the fundamentals working in the favor of Apple, and we did see some pretty decent volume come into the stock considering the day on the buy side with that green stick there. We also we positioned ourselves into First Solar today as well. Some people would criticize saying, okay, well, this stock's been dropping. What's gonna be that catalyst? Why would it go up? Well, I think we got a number of good things happening for First Solar actually on the fundamental broad base. Sort of for all of solar and renewable energy. Today we got information that the solar loan, the solar credit was not going to be cut out of the budget deal in Congress. California also passed a new legislation today saying that 33% of their power by 2020 has to be by renewable sources led by solar. They signed the deal in a solar plant, and also, we are supposed to get news either hopefully tomorrow or sometime this week about the Italy incentives. I think that's holding the stock back a little bit, but the stock shows strength today. It didn't drop very significantly with the rest of the market. It showed strength. The volume to the downside was very limited, and it showed good strength, good buying action today. And I think the stock is bottoming. I think this is a great place to bottom. You see the price channel; it's falling right to the bottom of the price channel, and earnings aren't coming too soon for this company, but I think if we get I think the market, if we get a little rebound in the market here, and I just do think that renewables, are a good place to be. There's talk that okay, we got oil dropping, and that's going to take away from renewables, but if you look at the data, there really is not a relationship that as oil drops, solar drops, and I think that what we saw is we got this big spike in solar for solar off of the nuclear energy scare. Again here off the nuclear energy scare. And basically the stocks dropped back and it's given up all those gains off the nuclear energy scare. Well, today shows strength on the nuclear energy. We have a nuclear energy scare. Again, shows strength. We get all this renewables energy information out about Congress. I just think that you have at some point that these stocks have to say, okay, these are good buys, and at this level you can't say that this is not a good buy. This stock showed support as it bounced off this price channel. I just think that we are you see the strength line, the moving averages are moving up, the 200-day moving average is moving up, and it's right there. It's going to come up, and it's going to be able to provide support to this. You got the price channel providing support. Obviously, the 50 and the 20 are showing a little bit of weakness to the downside. But if you look at this stock on the stochastics are pointing up. They crossed today, and the RSI is very weak for this stock. This is a very nice value trade. I think if we do see a little bit more downside, I would be willing to add a little bit more to this position. First Solar is one of our top solar rated stocks. It's got the best growth, the best profitability, the best management, the best financial health. And the thing it's been lacking is value. And at this level, this is a 15 to PE ratio. This puts it not definitely a little bit higher than the rest of the solars, but this is the strongest company in the solar sector, and if there is going to be a solar rally, it's going to come here and it's going to come in TSL. Other current positions, we had a rough day, a start to the day, obviously, with the market dropping as significantly as it did. We had a couple speculation plays in JASO and ENTR that were just half positions, and we took those both for 1.5% losses. The real one that hurt though was AGU. We were really behind this stock, Agrion. Thought that it had dropped a little bit. Looked like it was at a good price level. Looked like it was a good place to enter the stock. Moving into earnings, this is a company with 9,000% growth in earnings per share, and this is a stock that is definitely going to have its day in the sun, and we're definitely going to look at it again, maybe a little bit closer to earnings, or if we get some kind of news that really shows that this stock should be strengthening, but for the time being, we're going to lay off of it a little bit. We also stopped out of ASML. We raised our stop limit on that and got stopped out with a small gain. As that stock showed weakness with the tech drop today. They have earnings tomorrow morning, and if those earnings are good, we would definitely think about picking them back up tomorrow morning as a quick trade, or maybe a nice little midterm play with strength coming out of them, as really they're the first tech company to go for earnings season. So big weight on their shoulders, but they're a semiconductor equipment company. I think if they can show some strength, which we are expecting them to show, this could really be a nice trade, and I'm sure some of our clients are still holding on to some of those positions. We also picked up a short sale today in DR Horton at 1172. We really just wanted to pick up a couple short sales or look at some short sales today to sort of give us a little bit of a hedge on some of our buy picks. With the market being just pretty volatile right now, it's important for us to hedge some of these buy picks, that we have, and sort of have duality in our positions, and that position worked out well for us with a 1% gain. We're still holding on to half of that position, as this is a company that's a little bit overvalued, has a price to earnings ratio of 115, and is one of our top 5 most overvalued companies moving into earnings season. We expect some downward movement to continue for DR Horton. To continue, we have our extended value portfolio. This used to be our long-term ratings portfolio, and we just changed the name and basically kind of changed the way that this portfolio works a little bit. It's really what we like to. It's an extended swing trading value portfolio, and basically it focuses on. It's powered by our equity analytics. This is something we just launched recently, equity analytics. And that's going to continue to be something that we're going to work at, where we basically price different companies on a long-term basis with fundamental analysis. We also then take value scores, profitability scores, management scores, financial health, and growth scores, and compare them within their own industry and see how they stack up compared to their competition. It's shorter than a long-term portfolio, looking at about a 2 to 4 month target, maybe 1 month target for some of these positions. So it's an extended value portfolio. We're looking at stocks that have show value at their current levels, and we want to get into them. We think that over the next 2 to 4 months they could increase in price. And this is going to be a really good portfolio to kind of position yourself along with our shorter term stuff. And it's actually, with our weight, it's actually a higher weight for us in this portfolio than it is our other portfolio, while there's more attention definitely paid to our buy pick portfolio. For tomorrow, it's all about JPM, it's all about ASML. Those earnings need to be strong. If they show strength, this market could definitely really pick up a good rally tomorrow. I could see an 80 to 100 point gain tomorrow, sort of just covering what we dropped today. Retail sales tomorrow morning, those should match what we saw earlier in the month and be strong. That would also help. It's a Fed day with the beige book tomorrow. That usually brings strength into the market early. And we have business inventories as well tomorrow morning. So a lot of stuff on the docket. There's a lot of chances for us to get some good news and get some rallying going. Please visit us at our website. Email us anytime at contact@theoxengroup.com. Call us and be a part of our 70% plus accuracy.